It's loading. So I think we are live now, Julius. So welcome everyone. I got just a Slack message from my team that we need to start a bit slow just to make sure that people are joining, etc. Because in the previous webinar, we were like, yes, hi, jump to the topic. So they were like, Chris, you shouldn't do that. I'm like, it's my second time. So, doing my best. Anyway, thank you very much for joining, Julius. Welcome everyone to our second webinar on pricing. And today we have a very, very interesting topic because last year and a half, actually, we've been collaborating with ARRtist, and together we've been gathering the data for pricing of SaaS companies in Germany, actually in DACH region. And we are here with you to share the main insights from the report. But before we go there, let me introduce Julius. So I actually have the introduction. So co-founder and managing the director of ARRtist, ecosystem builder, angel investor. It says on your LinkedIn 70 investments. My God, that's amazing. Sales expert and the host of an ARRtist podcast. I highly recommend. You had some very special guests, me included. Just kidding. There were like more exciting guests than myself. So, Julius, welcome to our webinar today.
Thank you very much for having me, Chris, and thanks a lot for this great cooperation regarding the report. And hello to everyone. Great you're here.
So if we have some, let's start with a very icebreaker with an audience. So you can chip into the chat. Where are you from? Because I think when I look on the invitee list and people who are joining us today, actually we had a quite of international crowd. So everyone is interested in Germany. So feel free to comment where you are coming from. And maybe before we go into the content of the report itself, Julius, maybe you can tell us something more on the high level, meta level. So how do you perceive, pricing as a topic in the companies that you've been building, in the companies that you've invested? How popular is the topic? How advanced are the companies? What are your overviews? Because as I see, we're also on the sales side, and frequently sales don't like pricing in particular. So what's your view?
I mean, in general, you can operate on to increase top line and profitability quite fast. If I take a look on pricing and how people access pricing, I think it really depends on the stage of the company. Yeah. So if you go early stage, you're trying to find the product market fit, you're trying to find the value pools you're having for customers and addressing their pains. Pricing is a very iterative process. Why? There is a lot of uncertainty in your go-to-market engine overall. So you're not sure about your own pricing, how to price, how to set a competitive pricing in regards to the market. And what sometimes happens is if you figured out your go-to-market engine and you figured out how to repetitively saying, then the pricing stays the same for a very long time. Yeah, and sometimes founders miss
in the room, right? It works. Like
it works. Exactly, it works. But you're of course you're increasing the product, you're increasing the value you're delivering. So sometimes a lot of founders missing the opportunity to optimize or strategically review pricing again. And I think there is a lot of opportunity which just sometimes is forgotten.
And do you see any patterns when it comes industry to industry or maybe country to country that, some industries are more advanced, some countries maybe are more advanced? What do you think about Germany advancement of pricing? Because we got some interesting results in our report, right?
We got some interesting results in our reports. We also will talk about. I think to compare country by country, it's a bit early, I'd say, Chris. Yeah. So of course we are trying to gather the data here over a lot of countries, also over the next years. So I'd be a bit too radical to have an opinion here. Who is more advanced? Who not? Usually, of course, pricing is also like goes along parallel with the evolution of the market in general. So if I would have to do a guess, I'd say the US and UK are probably more advanced in pricing than we are here in Germany on the DACH market. Why? Because the evolution of the SaaS market and the SaaS industry is like a couple of years further. Industry-wise, I think it's super difficult to generalize here because within the industry you have very different go-to-market motions. Is it sales-led? Is it product-led? You have within the industry very different ICPs. This is more enterprise. This is mid-market, SMB. So I think we can take a look on the data later, but I'd be very careful to generalize here. This is my opinion.
But one general, I think, overview that we both share, correct me if I'm wrong, that the topic is getting more and more traction. So I remember visiting ARRtist last year. By the way, highly recommend the conference, and you should already buy an early bird tickets for next year if they're available for the next year. But I remember 2 years ago, like pricing was this type of a topic. Yeah, let's discuss this. This is interesting. But I didn't have that many discussions, okay, it's our growth lever, etc. Right now, this year, so 2 weeks ago, there were, I don't say plenty of companies, but there were some companies that were telling me, yes, we're treating it as a growth lever. Sales is not that great anymore because, it's more challenging to sell. Companies have some budget restrictions. Then performance is a bit hard, like it is harder and harder. And if not harder, it's least expensive. So companies were living, okay, profit, so we can sell more. We can do something about the pricing. And I see companies who are actually treating it as a growth lever, right? Attribute 60% of our growth to pricing. So do you also see this, that, the topic is, we are getting more advanced, and this is what I can say anecdotally. We'll go to the data in a minute, but anecdotally from the conversations that I have, I see this pattern.
To this point, I absolutely agree, Chris. So if I take a look to the German market itself, I see, as you said, a lot of more people taking a look on the topic, going deep into the topic. There's also big demand for knowledge and for data. So, and I think this is reasonable, in times where capital efficiency is everywhere, and the buzzword bingo is played at every VC. And of course, sales cycles become longer, and sales conversions become more difficult. Pricing is a lever you have under direct control, and if you have the chance to optimize there and get some more profitability points out of it, or increase revenue top line by adapting pricing, I think it makes sense to definitely review. So people who have a structured approach on all their levers and all their growth options, they definitely have, I think, are more into pricing than, let's say, 3 or 4 years ago, where capital was cheap and everyone was just like, okay, new customer acquisition, let's go for growth. Pricing is set, let's go. So I definitely see this point as well.
And also it's about the time, right? Because when you think about CAC payback period, we start to measure in SaaS things, how long they take, right? And then with pricing, you see tomorrow. Basically, I'm simplifying because increasing the prices to currently existing customers take time. Depends if you have monthly, yearly, the structure of your deals. But basically, it's a very fast ROI. So to add on what you were saying, yes, you can plug it. It's under your control, but also you see the effects quite fast. So, that's why, but I'm very biased, right? So that's why I love the topic.
Agree and disagree here, Chris. Yes, you see it very fast. What you, of course, not see is effects on price elasticity, So you do not directly see, if you increase prices by a certain amount, how does this really affect your conversion rates, for example, in the funnel. So there you should take a look also on the longer term. So it's yes and no from my point of view. You can adapt it super fast, but to get a really a strategic and structural view on it, I think you also need to take a look a little bit on the time stream. So just to add this here, it's, I think, both.
but I think we agree that this is an iterative process, right? And then
Yeah.
if you're not changing, I mean, you're not capable of addressing elasticity slash willingness to pay in time. And also to be very precise here, if you think in that game of 100 million ARR, 150 million ARR, then the game that you are referring to, this is definitely a strategic game that you can play. But if you're at the 2 million, 1 million, like 3 million, like below 10 million ARR, still your TAM is so big that the elasticity effect might not backfire at the scale that you are currently in. So but let's agree at least that this is an iterative process.
Absolutely, Chris. Absolutely.
Okay, so Julius, moving on to our effort, actually, our report that we did together. I actually have I saved myself, a printed copy. So we'll be talking about this one. Just to make the intro for our audience. So basically what we did 1 year ago, actually we got an opportunity from ARRtist to collaborate together. Thank you very much one more time for that. To gather the data for more than 1,000 German SaaS companies and create benchmarks out of their SaaS pricing pages. So basically what we did together, we were just going page by page manually, and we will scraping their pricing data. We enriched the data with G2. So this is how we get the industry classification. And on top of it, we also enriched the data with the LinkedIn data in order to understand the size of the company. So just to make it crystal clear, the data that we're going to present today, they're outside in. And 2023, it was only about the benchmarks. 2024 is about the insights, because we decided to do this initiative one more time in order to have year-over-year comparison. And I think this is what we're going to focus on today. And before we go into the price per se, I would like to present the first insight that was quite of a surprising insight for me. So it's about the pricing page visibility. So apparently, and let me present my screen. This is not the one that I wanted to present. Let me go back. So it's an order. So I opened like 4 charts on Google Chrome, and I didn't know the order of that one. So what we can see on this slide, and that was very surprising to me. So if you think about the pricing page visibility, only 41% of the companies, 4.5% to be very precise, they do have a pricing page visible. Then if you go deeper, 65% of the companies that have pricing page, they actually have transparent pricing. So not only they show the plans, but also you can see the price at what you can buy the software. Then there is intransparent pricing, so the ones that have plans but you can't see the pricing itself. And there is a false promise pricing. So this is this wonderful feeling where we click actually on the price, and you have like this big banner, contact sales. This is not the best practice as far as to our knowledge. And I wanted to ask you, actually, Julius, before we go into very details on the meta level, what is the reason of that? Why do you think that so many companies don't have a pricing page? Because I struggle to understand. I'm happy to bring some data why it's important to have a pricing page also.
Yeah, I think it's very important to have a pricing page these days, Chris, especially because the user journey of a software buyer is changing. So there's way more proactive behavior in gathering information. And I think if you are in the process of gathering information to do a decision and you will not get pricing information, it's a chance or a higher probability to really drop out the process. Yeah. So this being said, I think there are different reasons. I think first is, and this would be very interesting to segment in early stage, mid stage, or later stage companies. I have the assumption that especially early stage, as we discussed before, there is an internal uncertainty about your own pricing. Yeah. And people iterate a lot. People try a lot. People are insecure about their pricing. And of course, if I'm insecure and I also want to test A/B test, maybe with potential prospects and with an outbound or sales-led motion, then I have a reason to maybe not show the prices, or it could be rational for this. I think in many cases it's also like, okay, I don't want to set anchors. So even if you are more advanced, I think there is always the thinking, which, okay, it's like I don't want to show my prices because I want to have some flexibility within the negotiation process with my potential customers. I think this fires back, to be very honest, because my experience is that customers are well educated and also connected these days, and they will get a feeling from other potential buyers during, like, by communities, by asking around, by G2. So they will get a feeling for the pricing anyways. I think nevertheless, these are the two main hypotheses. And of course, a third one could be sometimes you have a very high complexity in pricing, especially if you go to enterprise. And it could be a reason to say, like, hey, we cannot bring this in a transparent way to the website. It's so customized and our product is also so modularized. We need to speak to customers first to qualify, to discover, and then based on the discovery, do a pricing. This could be a third reason from my point of view.
And to be very, and that might be surprising for me saying that as a pricing enthusiast, that I'm not saying that transparent pricing is the only way to go, right? So what I'm saying is that if you have a very high complexity, if you're working with enterprise level clients, if it requires a lot of the describing the product, explaining what the product is about, feel free to have an intransparent pricing page, but at least have a pricing page. And I could use my benchmarks, but actually 2 days ago we were very lucky also that we can use the data, because Elena Verna published on LinkedIn how important is the pricing page, with like great benchmarks, that this is like second, and like it goes hand in hand with benchmarks that we are collecting, that it's second or the first most visited page. This is the page that actually drives conversion, and of course thanks to this page most of the clients are getting acquired. So I think there are, like, she put like 7 or 8 reasons why it is fair to have a pricing page. You don't have to have like price tags there, but at least show value of your solution, right? Those are the people who are going to the pricing page, that show real interest in your solution. So then, show them something. Right? This is a place where you brag, basically, about the product. And then on the other side, it's funny that you've mentioned the competitors, because every time we're working with the client who doesn't have a pricing page, and their competitors don't have a pricing page, they're like, so do you know what are the price tags of your competitors? And they're like, yes, our clients are saying that, and then if no, we will do the mystery shopping. And on the other hand, so we are like, so why don't you show your pricing page? Because we don't want our competitors to see. And I'm like, well, guys, so look, there might be a situation that they are sitting like in the very same situation. So I think keeping it as a secret is a reason that many companies are plugging in. Nevertheless, it's never a good reason, basically, because if you won't know, you will know. You will find a way to learn what is the price tag, what are the plans, what is the discounting patterns. So this way or another, you will know.
Yeah, absolutely, Chris. And maybe one thing to add, but before this, I'm happy to invite everyone to ask questions in the chat as well. Yeah, so please feel free, if you have any questions, just put them in. We are happy to answer them. I just wanted to add, as you said, like, having a pricing page also has a big information value if you think about of intent analytics. So there are very great software solutions identifying unique visitors on your page, which go to the pricing page, because as you said, like, taking a look on the pricing page usually shows a high intent already in your buyer journey, that you're more down the funnel. So using this data and information could be quite powerful in like retargeting and reaching out cold or like semi-warm to this guy. So just not using or having this information is yeah, just like lost potential from my point of view.
Yeah, so maybe to sum up this point is like it's worth to have a pricing page if you have a high complexity. Really, if you don't want to show the price tags, I mean, you don't have to do it. Just present the value, show what people can expect, and then also use the data for your analytics to understand the intent, and also for remarketing purposes that can be very helpful. So let's go to the other topic that we have for today, which is like I think a very burning topic right now. So I hear it a lot, and I actually we also discussed it like a year ago on the conference. So freemium, shall we go freemium, or maybe we should not go free? I guess you're getting it a lot as well. And then let me share something interesting about the freemium. So apparently, in 2023, only 10% of German SaaS companies they were using the freemium on their website. Look what happened in 2024. We have like almost 16 percentage, like more than 16 percentage point growth. So more and more companies are actually leveraging freemium. And then to add on top of it, you can find this also in the report. Companies that have freemium on average have lower prices than companies that don't have freemium, being in the same industry. So we are trying to compare apples to apples here. So is it surprising for you?
No, Chris, I think the trend is not surprising for me, and I will try to explain why. I think we are in a market situation where people are looking for super fast ROIs, and also the latest buyer behavior report from G2 is stating getting a fast ROI below 6 months from a customer's perspective, from a buyer's perspective, in all segments, SMB, mid-market, and enterprise, is one of the three most important decision drivers when they purchase software these days. And if you know that as a software company, you of course like to show customers that you can provide value quite fast. Yeah. So, and even maybe before a paid purchasing decision. So having this in mind and having the whole capital efficiency discussion in mind, and lower budgets, and like difficult decisions, I think it's reasonable that there is a lot of people, or at least like here 2.5x, say, okay, we want to show potential customers the value we can provide within a freemium plan. And of course, this is not possible for every product, depends a little bit on complexity, with the intention that the customer understands the value, the customer understands we can help solving the pain, and then also comes to a willingness to pay. Of course, it's a double-edged sword. Yeah, I think converting them then from a free value add to paid value add is, from my point of view, quite like more difficult. And this probably leads to the point the data shows that then the average pricing of companies with a freemium is lower because it's more difficult for them to price up.
Yeah, so you need to lower the barrier of entry, most likely. And then I have the feeling that, first thing that you should do when introducing the freemium, because we can see here that there are many companies that actually decided to introduce freemium last year. Like the KPI on your management dashboard should be conversion from freemium to paid, right? This
Absolutely.
is like your main KPI that you should, maybe not the main, but like in top 3 KPIs, you are introducing freemium. I think that, when I see that, many companies decide to just keep freemium, and yeah, we do have freemium. Everyone has freemium. Like we don't care. Like the conversion from freemium to paid is like 0.0001%. Like, or it is what it is. But then if you're introducing a freemium, this is an important and big decision for you, right? Because you can actually have downsells, right? So people will start converting vice versa, which is from paid to free. And this is a problem. So I think it requires a lot of caution actually while introducing the freemium, and it's also for the very particular case. And we have a first question. So our thoughts, Julius, about product strategy, price leadership, or innovation versus impact on the pricing page. Let me maybe you can. So what are our thoughts about product strategy, position, price leadership, or innovation versus impact of the pricing page?
Yeah.
And second question, freemium versus competitor Intel. Maybe let's start with the second one. It's a bit easier. So freemium versus competitive Intel. I assume that, and the question is from Michael. So if you have freemium, your competitors can understand your product better, can mimic your features, etc. Do you think it's a real challenge?
No, I think it's not, Chris, because if competitors like to do this, they will do this anyways. So I never have seen a software product which was not accessible by competitors in a certain way. Yeah. So these are human beings. They have friends. They have friends who work maybe in other companies who use your product. So if they really want to take a look on your product, they will do it. So I think it's a too traditional view that protecting information will help you to win the market. Yeah. And I think this also leads to the first point, product strategy, price leadership, or innovation. I'm a big fan of innovation. Why? Because we are in a market which moves so fast, and also like cost of cloud, cost of AI, they're falling so rapidly. So I think it's almost impossible to keep a price leadership position for long term. I will always go for like trying to be on the innovation spot. Why? Because even if a competitor takes a look on your product and maybe build some features you're also having, they will be behind. Yeah. So I hope, Michael, this answers a bit of your question, or you need to a little bit more extend it so we understand. But yeah, this is my view on price leadership or innovation.
Because if you are just want to mimic your competitors' features, I mean, you are late already, basically, right? So in the so fast-paced market, it's just, I think, impossible. Because like product feature development takes like minimum, if it's like super small feature, like months, right? So I am on this one. I am with you. Okay, so let's move on then, and then we are going to discuss a bit of add-ons, but I think we can take it as a more general overview because now going from freemium, we've touched base on expansion, right? So if you're doing free, I mean, you need to expand. So at the same time, what we are seeing in our reports is that what is great, more and more companies are actually leveraging add-ons. So we can see that last year, 86%, almost 87% companies didn't have any add-ons. So no chance actually for expansion revenue beyond upselling plan to the more expensive plan. And it goes hand in hand, like the market, freemium and add-ons. Things are, or those numbers looks very similar, right? So people or companies start to introduce more and more add-ons, which if you take both of the information, so freemium and add-ons, correct me if I'm wrong, but maybe we're going a bit more into the PLG side, a bit more into the expansion revenue side, and trying to use the most, or like monetize the most, our current clients, rather than trying to get new leads, growth at all costs, etc.
I partly
challenging one because PLG, correct me if I'm wrong, not the most popular, in particular in Germany.
That I won't say, Chris, but I'm also not a PLG expert to say this. I think this data shows a trend which is related to the market and software buying. Yeah, so I guess that like 3 years or 4 years ago, you have been selling a complex product suite, yeah, in a sales or an outbound motion, or so you have this, and now we're having a changing buying behavior that people want to see value very fast. Yeah. So what you do or what I would do as a founder is like, okay, I modularize this complex product I had before, and I take the first module into a freemium site. And this is the data we see. Yeah. So we give customers the chance to experience value very fast, which brings them to the point, okay, ROI in terms of our return on investment or value of investment is there. And then, of course, I give them more other modules, maybe out of my core suite, where we then can do land and expand and upsell them. So I think the data shows a little bit that holistic products are a little bit more modularized, because then buying decisions become easier because customers understand the value better. Before, you had like complex products, long or sales products, where you really needed to understand the full product as a customer, buy the full product as a customer, and this of course became way more difficult. So I think this is the reason we see this interesting data, because add-ons you can only do pricing wise if you have add-on value on the product side. So either we see crazy amount of additional value and product development, which could be affected by the AI trends we see. I guess it's more like modularizing products.
And to add on though, and just to make it crystal clear, I mean, there are great German companies that are doing amazing in PLG and both in sales.
Yes.
My point was that comparing to other countries, and this is not the topic of our discussion, we see in Germany more enterprise-focused companies, and those are typically sales-led. So this was my only point, just to make it super clear. And on this point, funny as it gets, you know, while thinking about the add-ons, like I fully agree that you need to start like with showcasing the value, right? We have this saying in our clients when they're asking us, you know, how long it should be with how long should the trial last? And we're like, as long as you present the value. This is the most important. If it takes 7 days for clients to understand the value, it is 7 days. If it's like 24, 31, 50, whatever, make it as long as they can see the value. And of course, you know, I'm also with you on the expansion, right? You need to make sure that your expansion revenue is happening. The problem that I have, like you said about the strategy, I call it like foot in the door strategy. Like, not I call it, this is how it is also called. But I have this problem that with foot in the door strategy, I mean, frequently the body is not following the foot, right? So, you know, we just have it. We have a foot in the door. We did maybe not. We decided to have a bit lower prices or freemium at the very beginning, just to land the customer. This is what I'm hearing a lot, right? We just want to land the customer, and then we show the value. We present there is an expansion. But then, if you look closely into the data, still the strategy for expansion revenue is there, but frequently the actions are not following. So just important, I think, to remember. And I think with add-ons, we have another question from Jana about outcome-based pricing. So, you know, all the success fee, like we call it different: fee set risk, success fee, outcome-based pricing, performance-based pricing. So all the pricings where you pay for the outcome, basically, that you receive. What do you think about this, Julius? Because I'm very opinionated here, so I will leave the stage to you.
I think for most of the cases, it's not a good idea from my point of view, because you have very big problems in causalities. So really linking your value to an outcome, or linking ROI to your product. You have a lot of discussions. It's also very complex and drives a lot of effort to do this. Yeah. So there are a couple of models, very few, where you can really attribute your product to, let's say, cost savings. Yeah. And then there is an option of do value-based pricing on the cost savings, but it's really a few. Otherwise, what I would recommend, if you think about the logic, because the logic itself makes complete sense, to say like, hey, you're saving X, and I would like to have 20-30% of this value for me. I would try to of course do this in the sales process on a theoretical basis, or work with POCs before the contract. So like in a certain time frame, in a small project which is very well defined, you can show your cost saving, for example, or an ROI. In general, I would not recommend doing it. But happy to hear your opinion here, Chris.
So for me, I mean, I'm with you that on paper it looks this is a very good idea, right? And like
Yes.
business wise, it makes a lot of sense. And I was like introducing these models both in value ships and also before in my big consulting career, these models to my clients. And I think that conceptually it is the most advanced and most likely the best model to follow. But the problem is that you need to be extremely advanced. And why is that? First of all, attribution. So we have this joke that the person who will find out what is the marketing attribution will receive a marketing Nobel Prize. Like, it's not existing, but I think if there is a person who will actually find out how to attribute marketing with marketing mix modeling or something like that, this person will be super successful. So attribution is the first thing. And then for some cases you can attribute, so cost savings, as you said, right? I mean, this is not that hard to attribute. But then the problem, and this is what I see a lot, is sustainability of the model. Because typically when you introduce a software solution, you see an exponential growth of efficiency, right? So you didn't have a solution, now you have the solution, the growth is exponential. But in time, it's just not that growth anymore, right? So you have your clients who are very happy to pay you, like, I don't know, 10%, 5% of the commission, or like you name it, for the first month, second month, maybe for the first year. But then after 2 years, sustaining this model is getting very, very, very hard. So two aspects, and to make it also very clear, I think it would have been great if every business was on outcome-based model, because it seems like, on the meta level, it also seems fair when you think about this, right? But then extremely hard to attribute, extremely hard to sustain for SaaS businesses. On top, for a business like mine, for example, on services, this can also lead to some discussions, because you might push with, for example, clients into the different directions, or client might think that you are not going to the right direction because you are thinking only about the outcome that was there. I think it can happen also to software businesses. So the last question not question, but the last benchmark that we've prepared for today, and I think the best for the last. How do you say, last? Definitely not last, and not last not least. So it's about price tags themselves. So let me show my screen, and I will show actually two benchmarks here. So the first one is about prices themselves. So what we can see here, this is the price change year over year for both, not both, but for cheapest plans. So we see that barrier of entry is increasing, which is counterintuitive, taking into consideration the freemium increase also. But I think those are just different companies. Might be different companies. Then the average price increase is around 13%, and the increase of the most expensive plan is 12%. So that's number one. And then let me just go through it to page number 56. And what we can see here, we have a deep dive data. So in general, we know companies are increasing prices. Like, this is like the general benchmark that we can see. On the other hand side, if you zoom in, you can see different industries. And of course, not all of them decided to increase the prices. And I think what is the most interesting for me is the prices of AI. So this is what you can see here. This is like the third bar on the left-hand side graph. And what you can see here is that AI prices are decreasing. So I have two questions for you, Julius. The first one is a general overview about price increase. What do you think about this? What are the reasons? And you also, anecdotally, when you are working with your, or on the smaller sample, you are working with the companies, do you see it? And then we will go full-fledged into the hypothesis why AI prices are decreasing. So I was trying to avoid this word for this webinar, but we could.
I think general price increases are, I think from my point of view, driven by two things. One we already discussed, Chris, is like it is a fast and easy option to increase top line, especially when sales gets harder and the amount of new customer will probably decrease. So it's an easy lever to like realize your plans and targets. I think the second thing, this is like accelerated by a general market environment. So we had inflation everywhere. We had a general perception of price increases on the end consumer side. So people were aware that prices are generally increasing. And this, of course, opens a little bit the door also for companies to do price increases more easy because, like prices are hiring up everywhere. So I think this is logical. Then B2B founders and C-level executives use this momentum to higher prices. On the AI side, I think two drivers for the significant decrease there. I think first is, of course, cost of production. So we see that based on the foundational models, LLMs, like just the price per iteration, the prices of processing are decreasing significantly, also because of rising competition. And I think the second thing is the general competition of AI-based business models in general. So there are more and more competitors in all verticals coming up. And of course, competition usually leads to a price decrease. And then with these two effects, so you have a lower cost structure on the production side, you have more competition on the market. So you need to adapt pricing, or there's a race to the bottom effect. And I think these two are the major effects which drive price decreases on the AI side.
So Winston Churchill once said that when everyone is super, nobody is super. Actually, it was not Winston Churchill; it was Incredibles. But this is what I wanted to say, and I am fully with you on this one also. That there's an increase in the competition, and many companies decided to invest in AI. And also in this report, we can see that I think around 30% of the companies claim to have some AI features. And then AI is everywhere. And then like suddenly you were the first comer, you decided to price it quite high, but then it got commoditized maybe quite fast in your industry. And then you had no other option, so you decided to decrease the price. So I agree with the two. I have also the other one that and I've heard this on ARRtist, by the way. I'm using this quote a lot. A year ago, when the AI was starting, that AI is overhyped in the short term, and then underestimated in the long term. And then we are at the verge of being overhyped. So we are, when we are thinking of this, we are not that hyped anymore. So our willingness to pay is decreasing for AI. So I think this is the third hypothesis behind that. Anything to add on AI?
Not from my side. Maybe there are questions. And I mean, the only thing which maybe could be, or we could think about together, Chris, is of course AI usually is not a vertical only business model. Yeah, it's probably can be found in all other verticals as well. So it's a bit question of like how you cut the pieces here. But I would do the bet that we see a continuous effect here, and also next year we'll see even lower prices here, because I think the general market trend will exactly go to this direction, as we have seen it also in cloud a couple of years ago.
Yes, and this is what we also see, and this is anecdotal, but we see it a lot in the with our clients, that they've started using AI as an add-on. I mean, they were giving like 5 credits for free just for people to learn what the feature is about. Right now, more and more AI features are present, in the most expensive plan or in every plan, or like it's available everywhere. So this, we typically say that it can be like innovation/adoption curve, that your new features should go as an add-ons, then to most expensive plan, and then once commoditized, they should be available everywhere. So for AI, for us, it went very fast. So typically it takes you, when you are deploying a new feature that is quite groundbreaking whatsoever, it takes you 2-3 years to end the full cycle. Here we rather see like 6 to 12 month cycle, but this is anecdotal. So this is what we see in general on the market. So and then the cut the data, this is just by G2, and it would be amazing to have a benchmarks for add-ons. So what are the prices for AI add-ons? So my research team, together with Julius for 2025, we did. Okay, I'm kidding, but I think it would have been a very nice addition to the next one. Okay, Julius. So thank you very much for the discussion. I think we are now open to Q&A. So let's wait maybe 2 minutes for questions, if there are any, and maybe while waiting for the question, we can speak, or we can tell a bit more about ARRtist, because this in the conference that where we presented the first printed version of the report, and we were missing Polish founders there. So I think it would be very nice to invite all the Polish founders to the great conference. Maybe you can tell us a bit more what you are preparing as a next one, or maybe for the circus, because this is a bit closer.
Yeah, like happy to do so, Chris, and thanks for the opportunity. Yeah, so usually for ARRtist Summit, as you said, Chris, we usually do it in October in Berlin, in DACH, and we bring together 500 founders and CXOs from Europe only. So you only get access. Unfortunately, if you are a decision maker in a SaaS company, we bring together 225 of the best investors in SaaS worldwide, and have a full day and week. We call it the Berlin SaaS Week, with SaaS events, content from the best operators we are having in Europe. And I would be more than happy to have more Polish founders there as well. I think you guys doing a great job building really, really cool tech. And it would be our pleasure to have also like a couple of founders from the East, in a lot of people coming from Benelux, from France and the Nordics. So my dream is to make it even more international. But the next one is in October next year, so it's a bit of time. And as you said, in April, we do a big festival for revenue teams, really for the teams. So the leadership is coming with the ICs. If you'd like to join the ARRtist Circus, take a look, arrtist-circus.com. Super fun event, 2,000 people. It's really like a festival, a lot of fun on Fridays in Berlin. So if you have any questions, just contact me on LinkedIn. I'm happy to give you a little bit more detailed information about the ARRtist ecosystem.
Yeah, we are coming. Okay, so and then we have one question about AI, and it's like the statement that not all AI is equal. I fully support this. And in your opinion, what capabilities do you think enable price differentiation? So what, because like fair, AI is like a buzzword, and then there is like different colors to it. So in your opinion, what are the capabilities of AI that can increase or differentiate the price?
Yeah, I think AI itself is not a instrument of price differentiation. Yeah, I think AI is an enabler, is a technology which helps you to build solutions for pain points of your customers. So how do I think it? Okay, think about how you could use AI to build something new within your product, which creates value to help a certain pain point of your existing customers faster. And if you faster or better or at all, yeah, sometimes the technology just gives you options to solve certain things, big data problems for your customers. And if you really manage to deliver more value, to solve more pain, to solve maybe other pains of your existing customers, then AI is an enabler for an add-on pricing. It's an enabler to capture more value from your customers. So it's not an instrument or tool for itself. I would use it as an instrument to build product for pain.
Yes, and I would just copy paste the answer. So I'm stealing this one. I might change the value also to the profit. So the closer you are to the profit, the more tangible your effects of the AI feature can be, either on the cost optimization or revenue generation. The more it should generate, or the more it should differentiate the price. Okay, so if there are no other questions, Julius, thank you very much for joining us. Thank you very much for partnership on our report. I think we really have an amazing benchmarks this year, and for everyone who is interested in getting the benchmarks, you can either drop me a message on LinkedIn, or you can directly go to valueships.com website, and under the content and reports sections, you will see all the reports that we've put together with the newest one with ARRtist on state of German SaaS pricing year-over-year comparison. So thank you very much, everyone. Thank you very much, Julius, and hope to see you soon.
Thank you, everyone. Bye-bye.